don't shoot the messenger. Miami is on fire, and the prices ain't coming down no time soon. Nathaniel Crawford here, broker for Black Luxury Realty. I help you achieve your real estate goals here in sunny South Florida. And today, I want to share with you some great information from the wonderful people over at ISG, Related ISG. Craig Studnicki and his wonderful team have put out their this quarter's edition of the Miami Report. And it touches on some really important things that answer a lot of questions that we as real estate professionals get here in South Florida about the market, sort of where it's going, and what's driving all of that activity, and offers a little more evidence to what you hear people like me say all the time, and that South Florida is an outlier. You know, we have a very strong market. The market continues to be strong. The numbers are still, the fundamentals are still there, especially on the residential side. And I don't see that changing anytime soon. The acceleration of price increases may slow down, but I don't see prices coming down anytime soon. And so the first video I want to share with you, or first clip rather, I want to share with you, he's going to sort of talk through, give you a little more color around interest rates, and those interest rates affecting buyers, sellers, as well as developers. So before, when we had some supply chain issues, concrete, glass, there were a lot of those issues that were, sort of residuals from the pandemic that were affecting development timelines and construction. So now it's just for some developers, not all, for some developers, they're just sort of waiting probably another quarter or two before they break ground on some of these projects, because they're just waiting for interest rates to come down a little bit. For buyers, the obvious concern is high interest rates. Those high interest rates are reducing the buying power they have. So a lot of them are sort of staying on the sidelines too. Not all of them, but a lot of them, at least the buyers that are financing anyway. And for sellers, they have sort of the golden handcuffs issue. They have these homes with a ton of equity, but that equity is in a home that they have a really, really low interest rate on the mortgage on that home. And they're not interested in trading that really low interest rate for a higher interest rate just to cash out that equity. So they're sort of sitting in this space waiting for those interest rates to turn the corner. And what that is doing, and what the National Association of Realtors and some other people have noticed, is that is creating a bunch of pent-up demand. So we're already, in the United States, we're already roughly about 5 million or so, probably a little more than that, homes short. So we have a 5 million plus home deficit between the people who are looking to buy homes and the inventory that's currently there. And it would probably take about 10 years or so before we close that gap, even if everybody starts building. So that's one of the things there. And because of this pent-up demand of the golden handcuffs, high interest rates, there are a lot of people that are sort of sitting on the sidelines and creating what could very possibly be the largest buyer pool of pent-up demand in history. I'm going to say that again. The largest buyer pool in history may enter the market when interest rates come down a little bit. So check this out, and I'll be right back.
This interest rate issue has really caused quite an interesting problem, not just for us realtors here in South Florida, but realtors all over the United States. Sellers don't want to sell, buyers don't want to buy. Anywhere you go. We've also had a problem with certain supply chain issues since 2020, concrete, glass, and steel. So U.S. home builders have had a problem, not just high-rise developers here in South Florida. They can't get their hands on commodities, and they're dealing with very, very high borrowing costs. The net effect has been this headline from the National Association of Realtors. We're dealing with over 5 million houses short of demand at the moment. Supply chain issues, I've got some good news, are now mostly resolved. There's plenty of concrete, plenty of glass, plenty of steel to go around. The prices are high, but we're not dealing with shortages anymore, and we're not dealing with fluctuations of those commodities anymore. We're simply dealing with high interest rates, whether they're borrowing costs from a construction lender or their mortgage rates for your buyers. Look at this quote from the NAR. They believe that once interest rates start to drop and builders start building again, it's going to take single-family home builders 10 years just to fill the gap of what is short right now, 5.5 million houses. Please remember, the population of the United States is constantly growing. The fastest growing country in the world is India, followed by China, followed by the United States. So as our population grows, add that to the 5.5 million houses that are short, makes for an interesting financial outlook for these single-family home developers, condominium developers as well. U.S. News came out with this article that perhaps the biggest pent-up demand of buyers in the United States ever is being created right now. Sellers don't want to sell when mortgage rates are at 7% plus. Buyers don't want to buy. And yet, as I just said, the population keeps growing, but no one's busting a move yet. When interest rates start to decline, that big buying pool, once they start moving, I suspect you're going to see some serious robust sales all over the U.S. next year, 2024.
So, as you can see, there are some very, very interesting things going on to sort of set the stage as we go into 2024. And here in South Florida, we're still seeing some pretty consistent real estate activity, in large part because, to tell you where we're headed with this, the United States is the third fastest growing country in the world. And the state of Florida is the fastest growing state in the country. So with all of that interest, we've seen here in South Florida, especially Miami, as a market has outperformed every other market in the country for at least the last 3 years since the pandemic. So we're looking at very, very consistent growth there, which is creating some very interesting opportunities. So while there may be a bit of a dichotomy in what some people are seeing when they're looking at the macro, so to speak, so looking at all of the real estate markets and all the country and looking at commercial in these sectors and residential, what we're seeing here in South Florida is very, very strong on both sides, right? So not to say that there's no specific areas where things aren't moving as fast, but there are very, very sound fundamentals. And that is evidenced by this next clip where there is a very, very smart person who has made a very, very big bet on top of an already big bet on what's going on here in the housing market. Check it out.
I don't know about you, but all my life I've wanted to see tomorrow's news today. All my life. And I've kind of now studying a lot of the moves of Mr. Warren Buffett. He's clearly one of the most successful investors any of us have ever heard about. He's made some very interesting moves when it comes to buying stocks of single-family home builders. He's taken all the facts that I just lined up for all of you, and he's made some serious investments. Take a listen to this report from Bloomberg.
Let's take it to the housing market. Warren Buffett's Berkshire Hathaway unveiling a big bet on US home builders. The company disclosing new positions in D.R. Horton, NVR and Lennar, together worth more than $800 million. This according to their most recent 13F filings. Katie Greifeld has the story. Hey, Katie.
Hey, John. Yeah, home builders certainly rallying today following that vote of confidence from Berkshire Hathaway. We're talking about D.R. Horton, Lennar and NVR. Those positions were added in the second quarter. And of course, those stocks have been on a tear all year, given that big demand for houses has been met with a severe shortage of existing homes for sales. Now, in addition to these new positions, Evercore analyst Stephen Kim points out that Berkshire Hathaway already owns stakes in private home builders through Clayton Properties Group. So these new positions deepen that bet. And this was interesting, John. Evercore's Kim wrote that Berkshire's investment could help highlight, quote, the home builders' strong cash flows, healthy balance sheets, and favorable industry backdrop, out to a broader audience than the builder stocks have historically attracted. And you can see they're certainly seeing that love this morning.
So that's Warren Buffett. Here's what he's measured. The population continues to grow. Interest rates are poised to decline. We currently have a shortage of housing. He might call them houses, but housing also includes condominiums. He's busting a major move, a big investment in these companies because he sees the profitability of this for at least the next 10 years. If it's good enough for Warren Buffett, isn't it good enough for all of us?
So, you see what I mean? So Warren Buffett puts $800 million in on top of however much they already had. They're betting on the fact that there's a very clear supply and demand issue there. We have very low inventory. There's a lot of demand for housing, and somebody has to fill that housing. So there's huge opportunity when we're talking about the D.R. Hortons and the Lennars and these large home builders to have, for the foreseeable future, a lot of demand, because people are going to continue to need somewhere to live. And in a lot of cases, which is something we can address in another video, but in a lot of cases, there aren't developers that are building inventory for ownership. When we talk about affordable housing, in a lot of these cases, people are talking about apartments, which really don't serve the ownership purpose. So building these big apartments all over the place and calling them affordable housing is sort of a misnomer in a lot of cases, because it's affordable, but they don't own it. So I get it, but I don't necessarily agree with it. The next thing, and this sort of feeds into all of that, right? So we know that we are at a historically low levels of inventory, and this video here that we're going to go into sort of gives you a good diagram on this. If for those of you that have followed the Miami report, Craig will probably allude to it in the video that he said before that we were at historically low inventory levels. Now our historically low inventory levels are even lower than the already historically low inventory levels, right? So, and on top of that, here in South Florida, we've seen consistent rises in single family home prices, and we have seen probably what is one of the largest, if not the largest, increases in the value in South Florida condo values, right? So take a look. Here's some interesting graphics for you.
When you add all the condos and all the houses that are available for sale right now in the Tri-County area, Palm Beach, Fort Lauderdale, Miami, we're now at a historic low. I might have said that about a year ago. Well, guess what? We're lower than that. We've got just north of 17,000 housing units to sell. We really need to build more. Some of you believe that some of this is going to be compensated with the pre-construction condos that are being promoted in South Florida. Yeah, in about 5 years. Between now and then, we've got to figure out what we're going to do. This is what's happened with single-family homes in the Tri-County area in this year. When we compare the prices of single-family homes this year to last year, we've seen an 18% increase. If you look all the way to the left, between 2020 and 2021, we saw the largest increase in the value of single-family homes in that particular time. That had a lot to do with the people that were moving here because of everything that happened in 2020. But nevertheless, we've seen a very interesting spike in the value of single-family homes this year, even with 7% mortgages. Condominiums, even stronger. The largest increase in the value of condominiums in South Florida is happening right now. The largest increase in the history of South Florida. We have a 20% increase in the average price, the average closing price of a condominium this year compared to the same period last year. Condos, houses, tight supply, 7% mortgages, just doesn't seem to matter. Please remember, we're still the fastest growing state in the country, and the market is dominated probably by 75% U.S. buyers moving here from all four corners of the U.S. with cash and wanting to have that home, particularly on the water.
See, told you. So it's getting very, very interesting, to say the least. One of the other interesting things there, and this is specific to the luxury market, and what I believe to be very interesting trend as we sort of see some of those spectacular numbers that we're used to seeing in the New Yorks and Californias sort of bleed more consistently down here into South Florida. Is last year there were about 17 transactions for condos that were priced over $20 million. We are currently on pace to probably double that this year, right? Which is mind-boggling if you think about it. And that's just the condos that are standing inventory. That's not counting the $20 million condos that are pre-construction that'll probably sell between now and Q1, Q2 of next year. And that is bolstered by a very interesting trend that outlasts both you and I here in this video. So when someone tells you, or if I were to tell you that people have been moving to South Florida consistently for almost 100 years, it is no exaggeration. And if you don't believe me, watch this.
Look what happened with condominiums selling for north of $20 million in South Florida. Well, pre-2020, you had 3 in 18, you had 5 in 19, even during 2020, you only had 5. Let's fast forward to last year. Last year, there were 17 condos in Palm Beach, Fort Lauderdale, Miami combined that sold for north of $20 million. This year, through September, yeah, I know, 7% mortgage rates, I know. But through September, we're at 26. I'll stick my chin out and tell you that by the end of December, because we have 3 more months, that number could hit 34, which means we've doubled the amount of $20 million transactions in 2023 compared to 2022, despite mortgage rates. Welcome back to the outlier. That's South Florida. Now, again, I know many of you always say to me, well, the pre-construction inventory, what about the pre-construction inventory? Well, it hasn't really changed much since Q2. There are 53 condo buildings being promoted in South Florida, totaling just under 8,000 units. The status of those units is pretty much the same as Q2. It's going to change. It's not going to be the same in Q4. I know I'm going to have different information on Q4, but right now, it's pretty much the same as Q1. There's less than 1,200 of those 8,000 units that are actually getting built. The rest of them are waiting. They're not waiting for supply chain issues anymore. I said it earlier today, I'll say it again. Concrete, glass, and steel, the prices have stabilized. They're high, but they're predictable. We're no longer dealing with supply chain issues. We're simply now dealing with high borrowing costs. And assuming interest rates start to decline next year, assuming Warren Buffett is right, assuming most people in the mortgage business are correct, you're going to see a lot of the 41 condos that have not yet broken ground start to go vertical. Now, from there, what do? We just add time. 3 years, 4 years, 5 years, 6 years, depending on the height of the building. And that's when you'll start to see this pre-construction inventory add to the much needed supply that we need simply to meet population demands. I offer this again as perspective. In the 2000s, we built way too many condos here in South Florida. Almost 60,000 condos got built. They all got sold, but it kind of contributed to the 2008 problem. In the last cycle, the last decade, from 2012 right through 2019, we built just about 20,000. In my opinion, that's the exact number we need to keep building each and every decade just to meet the growing population of South Florida. Today, you've got about 8,000 being promoted, but only 1,200 are under construction. And if all 8,000 were under construction, folks, it's not enough. We got to get more of these high-rise condominiums started, again, just to meet the population demand. I'd like to give you a much larger perspective because there's been a wave of people moving to South Florida, or actually the whole state of Florida, for almost 100 years. It's not just because of what happened in Tax Reform 17, and it's not just because of what happened in 2020. Take a look at this. This is an interactive video we found on the internet to illustrate a very large point. This is a population study of the United States and Florida in the last 100 years. What's listed here right now are the top 20 states in 1920, when the population in the United States was 107 million. Before I even pushed the play button, we are more than 3 times that now. The population of the United States is just over 340 million people. I think I might have said it earlier. The fastest growing country in the world today is India by population. The second fastest growing country is China. Number 3 is the United States. Florida last year was the fastest growing state in that third fastest growing country. Let me play this video for you, starting in 1920. You're not going to see any evidence of Florida in the top 20 until 1950. But until we get to 1950, take a look at how the top 10 changed positions, and then watch the meteoric rise of Florida. Here we go. We're in the 20s. Population of the U.S. is growing. Florida is nowhere to be found. And the top 10 states stay stubbornly the top 10. Be patient. They're going to start changing. And as we get closer to 1950, you're going to see Florida pop up as one of the top 20 most populated states. And watch the meteoric rise as we get there. Here it comes from 1947 to boom, there's Florida on the bottom. Now watch how it pops. Watch how, and keep your eye on those top 10 states as well. Florida has popped in the mid-50s all the way up to almost 15. Why? I know why. It's air conditioning. I looked it up. We developed air conditioning, and all of a sudden it was really pleasant to live in Florida. And the population started to pop. Look where Florida is now. In the 60s and 70s, we developed inexpensive air travel, because in the 40s and 50s, it was really only available for the wealthy. And then it became available pretty much for everybody. It was hard for me to see Florida pass New Jersey in the 70s because that's my home state, but we didn't just pass New Jersey. Florida passed Michigan. We passed Ohio. Now we just passed Illinois. Some of you may not know what Pennsylvania is. Doesn't matter. We passed Pennsylvania in the 1990s. Wait, now look at the top 4. California, Texas, New York, and Florida. California, Texas, New York, and Florida. How impressive is Florida? And in the 2000s, that's when, in the 1990s, really, that's when the Latin America really discovered South Florida, which really added to the population popularity of this. In 2012, be polite, wave goodbye to New York, Florida, wave goodbye to New York. We passed the big state of New York in 2012, and then we became the third most populated state in the country. It's California, it's Texas, and it's Florida as we round out to 2023 with 340 million plus people living in the United States. We are the third most populated country in the world. Now, the third most populated state in the United States and the third most populated country in the world. Forgive me for that. Here's what the result of all of that has been. From Bloomberg just last week, when you take the value of all the houses and all of the condos and you appraise the value of all of that real estate, last week, Florida passed New York. We are the second most valuable real estate state in the United States, just behind California. And please remember, the population of California is double Florida. Florida's around 23 million. California's around 42. So it's not bad for Florida, huh? New York is number 3. Texas is number 4. You know, on a personal note, I think about my dad, who used to tell my brothers and sisters and I that the best time to ever plant a tree was 20 years ago. The second best time is today.
See, told you. So we have some very interesting combination of circumstances that are going to present some very amazing opportunities right now and in the coming months. My take on it and what I'm telling a lot of my clients is that the smart money is spending the money in the smart places, and there are a lot of smart places in South Florida to put your smart money. And I'm happy to help you put that smart money to work because I think I'm a pretty smart guy. Happy to help you. My goal is to help you achieve your real estate goals. But so to sort of recap, the 4 big takeaways from this, right? So number 1, Warren Buffett, the Oracle, as they call him, has made a very, very, very big bet on housing, right? We see what's coming, he sees what's coming, and a lot of smart money follows his smart money. So number 1. Number 2, we are at historically low levels of inventory. And that's the only way to change that is to build more inventory, right? There's no other way around that. Supply, demand. We're 5.5 million homes short. We're going to need more. And that's just based on today's numbers. That's not counting, births and relocations and all of this other stuff, right? Here in South Florida, specific to us, as this new construction inventory, more new construction inventory or pre-construction inventory starts to go vertical, it's going to help that ease some of that, but it's not going to help ease it in the short term. It's going to help ease it in the long term. Why? Because it's pre-construction. So it may sell and there may be opportunities to buy for that, but you still need another 3 years for that stuff to get built. And for South Florida is now the second most valuable real estate market in the country, right behind California, which is saying a lot considering that California is twice the size of Florida. So we're half the size and we're right behind them as far as value in the housing market. So there's a lot there. So those are your 4 takeaways. As always, thank you so much to Craig Studnicki and the wonderful folks over at ISG for putting together an amazing, informative report with some awesome visuals to really, really help people understand. I will put a link in the description to this video directly to the whole video. So if you want to just see the whole thing without my commentary, I hope you like my commentary, but if you don't want my commentary, you can check it out there. And as always, I'm here to help you achieve your real estate goals. My name is Nathaniel Crawford of Black Luxury Realty, and if you want to reach your real estate goals here in sunny South Florida, I'm happy to help. Call me, text me, let's talk soon.